everybody, and welcome along to the second episode of the Lenders Roundtable. And this is a collaboration between Property Tribes Financial Services, and the lender community. And joining me today from the lender community, I've got Shane Wallace from LendInvest and David Wheatley from Foundation Home Loans. And joining me from Property Tribes Financial Services, our mortgage brokerage, I've got Victoria and Austyn. So welcome everybody. And I think this is just such a great time to host our next Lenders Roundtable, because start of the year, it's got off to a flying start, a lot going on in our sector, and we've had the budget. So Victoria, maybe I could start with you. What's your feeling about what's happening in the buy-to-let sector? Is the phone ringing at Property Tribes Financial Services?
It certainly is. It certainly is. We have got a lot going on at the moment, lots and lots of inquiries, lots and lots of quite complex inquiries, which is where I think we do really well. We obviously have great relationships with the lenders, and we're constantly speaking to our representatives at the lenders, such as Shane and David and their teams, to try and help us navigate where we can place these complex inquiries. Lots of HMO inquiries as well we seem to be getting, which is great. And also what I'm loving is lots of first-time landlord inquiries as well. So people that want to dip their toe in the water and get into the buy-to-let property market.
Well, that's wonderful to hear that newcomer landlords are still coming through, because there's, quite a bit of negativity out there, obviously, with increasing legislation, regulation, taxation, all the things that we're always talking about. Shane, let's come to you first. Let's talk a little bit about LendInvest. Could you just give us a very quick potted history of LendInvest as a lender, and where you sit in the marketplace?
Yeah, thank you. Absolutely. So LendInvest have started off as a bridging finance lender back in 2008. So we're quite used to uncertain markets, should we say, especially being born when a financial crash happened, which we don't like those words, but let's call it what it is. So we started off as a bridging lender. We then diversified into ground-up development shortly after, and we moved into buy-to-let finance in 2017. And our most recent entry into the market was residential mortgages about a year ago. And we're a fintech company, which basically means we can use technology to allow us to have that quick speed, that quick decision. But there's always an underwriter, there's always a person behind that making that decision. And it's about making that journey much easier for especially for the professional landlord, without having to go through those obstacles that you might encounter with your PRA regulations type lenders. So we can have a common sense approach to the lending, but a very quick and smooth process to help those portfolio landlords.
Well, there's very often a need for speed in property, isn't there? So that's good to know. And how about you, David? What about Foundation Home Loans, a name that I'm very familiar with myself?
So Foundation, we've been going as Foundation since 2015 as a lender. I think we constantly evolved the proposition, like a lot of landlords are, with regards to their properties as well. So we started off looking at your buy-to-lets. Then we've moved into residential about 3 years ago, and then we've recently branched out into the semi-commercial lending side. And I think it gives a testament to how we see the market going in terms of borrowers looking to be smarter with their finances. I think it's always looking for innovative ways. And similar, like Shane said, we have manual underwriting with every single interaction. And I think the big difference is it means one of the principles of not giving advice is knowing your customer. As a lender, we want to do exactly the same to make a fair decision. And I think I almost am used to seeing what could be construed as a complicated transaction. We turn them and make them as simplistic as possible, but also make a fair decision, one which we'd happily relay to the client ourselves. However, we are an intermediary-only lender, so it's only with support like yourselves give us, which means that clients can interact with us in the very first instance.
Well, let's come to you, Austyn, because, we talk a lot about, I'm a massive fan of using a broker. When I was in my portfolio building stage, I had my broker on speed dial. They were like my phone a friend. It's such a volatile market and products changing so quickly. you really do have to be on the ball, and the broker can be scanning what products are out there because they're almost changing on a daily basis, aren't they? And they can be looking for the best fit for the client.
Yeah, exactly. I mean, at the end of the day, we call our people clients, but we are on their side. We are working for them, essentially in their shoes. So if we were looking at it from our point of view, we'd think, well, hang on, if that rate's gone down by 0.5%, we want to be on that as well. So it's almost a bit of a personal competition with yourself to make sure your clients are always doing as well as they can. And the people that come to us do need to stay with us because it's very rare they can go anywhere else. So we do build up good relationships with them. And through the time, it just you kind of make friends of them in a way, and you want the best for your friends. So you always help them out. You always make sure they're doing the best they can. And that's all part of our job.
Well, indeed. And property is a long-term investment. And I'm sure all of you in the lending community are looking to build up those long-term relationships because you get to know a client, you get to understand their profile. I expect you often work with people for maybe 15, 20 years sometimes.
I think there's a lot of value in that, and I think you're absolutely right, because yes, it's great to do one mortgage for a client, but you don't want to do just one mortgage. You want to see their multiple as they grow their portfolio, or the rest of their portfolio comes to fruition. And it's like, well, actually, would you like to bring that with us as well? And I think that's the same for the broker community. Once the client finds a good broker, they want to then use them for their further acquisitions, and when their product transfers and so forth comes up. It's all around that relationship building. If you find someone you can trust and who delivers on what they say they can do, equally as important, can deal with those complexities. Buy-to-let's not a simple, I want to buy a house and rent it out at X and I'm buying it for X. That's brilliant. That's kind of the real vanilla stuff. But most buy-to-lets have levels of complexities, like you said before, the tax schemes, the limited companies, the layering, the title splits, the near commercial, the hybrid properties, your HMOs, your commercial valuations, the list goes on. So I think there's a huge value in what a broker brings along with their expertise and their knowledge that brings to a lender, and the lender in return reciprocates.
Indeed. And, we mentioned the budget earlier because it has sent reverberations around the property community. Could I just ask our two lenders if they've adjusted products because of it, or if it's had any impact on the products that you had coming through?
So we're constantly looking at the products and the pricing in accordance with the swap rates. As we know, for the last year at least, it's been a very turbulent market in terms of the swap rates. We saw a brief spike with release of the budget. So it's something we are looking at constantly. We do always try and give as much notice as possible as well. So if we are making product changes, we communicate this out to our brokers and try and give as much time to be able to secure those rates to their clients. And again, it goes back to what Shane was saying of building that trust with our broker community, which then they can relay onto their clients to give the best kind of response at all time. But yeah, it's the swap rates are constantly changing. So I think our product team are constantly having to be on their toes, which I don't see as being a bad thing. It means that we're always in the loop instead of getting complacent, which means when things settle down, we can look to do more and more complex transactions that we're not currently looking at.
Well, these lenders roundtables are all about getting to know the lenders that form part of our lending community. And I was wondering, Shane, do you have an ideal profile, client profile? Will you consider a newbie right through to somebody who's very experienced? Is there a typical kind of landlord you favour?
I think ultimately we love a portfolio landlord, but we also love to help that person who's buying their first buy-to-let and stay with them in that journey as they become that portfolio landlord. So we'll look to lend to that first-time landlord on a small HMO or standard let property, and then we've got no limit to how many properties we'll lend on or to how many properties a client can have as well. So we like to be at both ends of those spectrum.
And is that the same for you, David?
Yeah, certainly. I think to say that there is a specific client we're looking for, I think it would almost be shooting yourself in the foot. I think as clients are constantly changing how they're looking to do it, maybe they've had tax advice, maybe they're looking at SPVs, all of these various different options. I think you need to be able to encompass as many of those different borrowing options as a lender. And I think that's the joy of a specialist lender, is we've got that flexibility, we've got the mobility, but also it's working with the right people to make sure we've got a right understanding of why someone's doing it. And I think this is something that all lenders should look to do, is having criteria, but being able to understand exactly why someone could be doing something and make a fair decision based on that as well. But yeah, we would cater for a vast array of different clients. I think it sounds silly if I said the more complex the better, but I think this is what separates us out from a lot of lenders, in the fact that we like these complexities and try and keep it straightforward, and it really creates a niche for specialist lenders. And the more a specialist lender would do, the more likely you've got other lenders to move into that space, so it creates more healthy competition, as it were, instead of a monopoly on something.
Awesome. Well, I'll ask the next question really just of the panel in general. We have this evergreen discussion topic on property tribes, and that is, should I fix for 5 years? Should I fix for 2 years? Should I just stick on a tracker? Obviously, it's very dependent on somebody's personal circumstances and what their intentions are with the property. But does anybody have a kind of position on that as we speak in March 2024?
Yeah, I think I always like this. It's always when you talk about whether it's the right time to take a fixed or a variable, or do you think the interest rates are going to go up or down, or what do you think is going to actually happen economically with the market? It's almost a lot of those elements are almost guesswork. It's almost saying to somebody, should you buy shares in company A or company B? It's almost that same. It's an investment. So I think the best thing for the client to do is look at the circumstances and their margins, and then decide where they feel comfortable with their risk, and where, they're gambling. If you're gambling on where you think rates are going to go, that is completely a gamble and a risk decision, gamble/risk decision. So actually look at the maths behind it, and the maths that work based on that particular property or on your portfolio, and your position to support that if things don't go in your favour, and then weigh up the odds. It's a bit different than when you're looking at a resi home, I think, where that's a very different way of looking at it. But that's probably the way I would look at it, because it's an investment ultimately.
I think the thing that we also look at is how much does somebody want to borrow, because normally you can borrow more money on a 5-year fixed, for example, than you can on a 2-year. So the stress testing is different for those two rates. But also it's about, what are their plans for that portfolio? Are they looking to, sell it in a couple of years' time, or whatever they're looking to do? It's working out a strategy, and what that strategy is then fits with the 2 or the 5-year rates. The other thing as well is there are lenders that are coming out with products that are kind of reflective of that in the market at the moment. So we've got a couple of lenders that are offering a 5-year fixed rate with a get out after 2 years. So that could be quite a good option for people that are unsure whether they want to fix for the 2 or the 5-year rate. And there are tracker rates that have no ERCs as well. So if somebody wanted to, if they feel that the base rate or that the SVRs are going to stay steady or go down, you could pop yourself on a tracker. And then if rates start going up, obviously that's where brokers come in. We will call you and say, look, how are you getting on? Should we look to review this and put this on a fixed rate? So there are options available on the market that are kind of reflecting this at the moment, which is great.
It also works on things like the personal circumstances of the person. For example, if you've got some bad credit in the background, and you can't get the best mortgages, you can't get the best rates at the time, you may only want to do a 2-year fix so you can get clear of your bad credit and then refix when it's at the right time. Bad credit lenders are always much higher rates. So as Tor said, it's very much down to their personal circumstances.
We're really digging down onto the nitty-gritty of why it's so great to work with a broker, because these insights are so valuable. I do think it's interesting where somebody says they're going to, they've got unencumbered property and they're going to take out, I don't know, a 40% loan to value mortgage. I kind of feel that's slightly counterproductive, because if you're going to go to the trouble of taking out a mortgage and indeed remortgaging and wanting to release equity, I kind of feel that you should go big or go home. I mean, obviously you've got to do what's comfortable for you, but if you're going to the effort and the fees of taking out extra finance, then maybe do think a little bit about that aspect of it. Do you agree?
Absolutely. I think, unfortunately, the media do paint this very scary story of what's going on with interest rates and the economy in general. And whilst there is obviously a lot of truth to it, when it comes to the mortgage market side, some of the articles I've read over the last 18 months are nothing but scaremongering. And I think that, unfortunately, that then impacts people's decisions on how much they want to borrow, and for how long for, etc. So again, that's where we come in handy, because we can show you all the different options, explain what's going on in the market, again, talk about what your plans are for the future, and make decisions from there.
Historically, we tend to see most of our loans around the 75%. Most of what we see is the clients are trying to leverage and take out as much money as they can, either if it's a refinance or it's a purchase, they want to put in as little as they can. You tend to see that, I think that's a report out back end of last year, might get some of the data a little bit distorted here, but I think they said, I think 50% of the landlords over age of 50 own 6 properties or more on average, unencumbered, which I was absolutely flabbergasted by. And I think they may be the landlords that you might see, not necessarily that age group, but those who own those unencumbered and go, there's an opportunity to buy something else, so they take a low LTV out of each property. And then that's where a good broker would come in and go, actually, why are you doing that? It's lower price potentially to borrow it on one property, opposed to paying 3 lots of arrangement fees or 3 lots of legal fees. Again, it depends if the product has a set arrangement fee or percentage arrangement fee as well, and what the lender's offering in regards to the valuation and legal costs and so forth.
Just to play it devil's advocate here, I would also say it's not going to be worth your time to take out too much and then have it sitting in your bank and just losing money at a mortgage rate of mortgage interest rate rather than a savings rate.
Absolutely.
So it's always worth discussing everything you need to do first.
And that's why it's so personable. What you said earlier when we talk throughout this discussion, every aspect is really personable to that client and their situation and their business plan.
Of course. Well, I remember the good old days when you could get a 90% loan to value buy to let mortgage. So 75% feels quite comfortable for me. I think in the current conditions across my portfolio, I'm sitting at about 62% loan to value, which feels right for me. And, if landlords use the various softwares that are out there, they can actually understand these metrics and see where they're sitting and think about their risk profile. And indeed, Victoria, when the landlord has everything on a spreadsheet or in some portfolio management software, it actually helps you, doesn't it? Because you can see the picture a lot more clearly.
Absolutely. And seeing the portfolio as a whole, sometimes you can spot where there are actually better properties maybe to remortgage or pull funds from. So absolutely seeing the whole thing. And that's one of the things we ask for. We ask for a whole list of documentation when we're doing our research. And one of them is the detailed portfolio. So then we know exactly what you've got. And we can do a full review on that for you. The other thing as well is I'm noticing with the first-time landlords in particular that the big question is, should they set themselves up as a limited company or should they have these properties in personal name? We are more than happy at Property Tribes Financial Services to have meetings with the accountants as well. We're not authorised to talk about tax, but we understand the lenders. An accountant might not understand mortgage criteria. And so sometimes I have seen companies set up incorrectly because the accountant is doing what's best for the client from a tax perspective, but they're not looking at it from a lender's perspective. So I always offer for my clients, especially if they're starting up, because it's important to get it right from the get-go. If they want us to sit in with an accountant, we can have a meeting, absolutely fine to do so. So all those little factors are so important.
They really are. And I don't know, maybe I could ask David. We know that the direction of travel is professionalisation of landlords, and that's very positive in my opinion. But would that be an indicator to you of a professional landlord that they were using kind of software to, make sure they fully understood the metrics of their portfolio? Would that give them a bit of a green tick?
The thing is, we can always tell when you've got someone who's very much clued up on their portfolio, just from the way that they're talking. from the way that if we're asking a question, there's a clear reason for everything that they're doing. Just going back on a couple of the points, as we say, it's very much individual, and I think software is certainly gives you a good help, but it's making sure that you are regularly reviewing it as well. And I think this is something that we've seen over the last couple of years when we're talking about the stress test being very different and how the interest rates playing a big part in that. I think if people have just been relaxing without doing any rental reviews, it's making sure you're taking a full holistic approach to your portfolio and remembering that it is actually an investment, and it's just making sure that you are keeping up to date with it to make sure you're maximizing from it. I haven't come across the software myself, but it's not to say that the people presenting the cases to us aren't utilizing that themselves, but it's just every lender's got their own way of doing things, and we try and work with the different portfolios that we've already got to try and make things simple for the broker, which ultimately means it's a lot easier for the client themselves. But I think using all the tools that surround you as well is important. As Victoria was saying, using the right accountant, making sure you've got decent solicitors. So it's utilising all of these different parts that form that business for yourself. Because I think that's something that some people forget, that it is a business for them. So it's making sure you've got the right parts to give you the right advice against each different aspect of it.
Well said. Hear, hear. My last kind of topic, just as we close this out, is down valuations. Just wondered, are they occurring in your applications? I've had one recently, which I was somewhat peeved about because the lender I was having a valuation by a lender of a one-bed flat in North London, and the valuer said that the lease was 85 years, and he downvalued it on that basis. But in fact, the land registry proved that the lease was 105 years, and I sent that in as a kind of challenge, and the lender wouldn't review it. They said, no, we're going with what the valuer said. So, I mean, that's an example where there was a down valuation because, you know, the surveyor got something wrong. But obviously, those down valuations are something that landlords need to be mindful of. Are you seeing any of that across your applications?
On your example there, Vanessa, that's terrible, to be fair with you, because when you've got clear evidence, then you would expect that to be challenged and the lender to support you with that challenge. Where a lender will, us as a lender, if you put a challenge in for any valuation, then we'll send that on to the valuer. Now, generally speaking, it's quite subjective on a lot of down valuations because it's client thinks that these comparables should be used, the valuer thinks these comparables should be used, and they come up with different figures. And so that's where it can be difficult when you're looking at any kind of down valuations when you come across those. But when it's something material and factual, such as a lease, and I must admit I had something very similar probably about 5 years ago. We got that turned over within a day and got a higher valuation. We got it sorted. So that's why I was very shocked by your experience there.
So it's definitely worth challenging.
Absolutely, 100%. A lot of other times it's very hard to get a valuer to change their minds because when it's subjective and not factual, then that's where you have where you do have a bit of a challenge. The other side you have the challenge is that you tend to see more. We don't see a huge amount of down valuations, but when you do see down valuations, they tend to be more on remortgages because clients overemphasize what they think their properties are worth. Sometimes, not saying the value is always right, because that would be very naive of me to say that. I'm sure we're all aware that if you sent out 3 different valuers on the same property, you would hope you'd get the same value. And on a standard residential house, you probably will do within a small margin. On a buy-to-let that's got any element of complexities and subjectiveness, especially HMOs, MUFBs, I wouldn't want to put money on that you'd get 3 valuations being even within a couple of % of each other. I don't know about your experience.
Not an exact science, is it?
No, absolutely. But it's not a rife market with down valuations at the moment. We're not seeing many of those. So I think that's quite positive. You tend to see when valuers are down valuing properties, they tend to be doing it when they think there's a downturn into the market. where there's uncertainties in the market, and they're taking a cautious approach to the way in which they assess properties, and they put that within their analysis.
One of the things that we try and do is, when we know a valuer is going to view the property, making sure that you're there with your comparables yourselves as well, because it helps to build the case that when the valuer is going to view the property, instead of them almost having to find those comparables, if you can already present some, it's a lot better than someone already making up their decision in regards to evaluation of a property. It means that you can almost not necessarily change their judgment, but hopefully point them in the right direction. And it's making sure that the property is presented in the right way at all times when the value is going out. It's those little things that we're doing. But as Shane was saying, if we had a report like that, we would be pushing back as well. And I think it's one of those things, it's making sure when you've got a property that is almost, there's nothing like it, making sure that we're well aware of that as well, because realistically, if you're looking for comparables to form a judgment, we do have to bear that in mind. And it's making sure you're working with your brokers as well to make sure that because at the end of the day, they're very experienced within a wealth of different areas in property. It's utilising them as well and working on that collaborative effort to make sure that you can get the right decision, and ultimately working on that basis as much as possible. So yeah.
Sorry, I was just going to say, it's interesting you said that, because I when I go to valuations, I do take a pack, but I always sound out the surveyor first to see how chatty he is and how receptive he is, because I just chit chat about the market and stuff like that. Because once or twice when I've given them my folder, that they were a little bit funny about it, but then other times I just say, oh, I've just put together a few bits and pieces of information about the local area. Here you are, use it if you think it's helpful. So yeah, I hear what you're saying, but I think it's important just to read the surveyor before you do that.
You're going to almost echo what you just said there, but in addition to, it's important that the lender and the broker send out the right valuer, the right type of right type of valuation. If you end up sending out a short form valuer to an Article 4 HMO, they may come back and give you a bricks and mortar value, which some lenders lend against, which is no problem at all. But more often we see them that they come to us where they've been downvalued or zero valuations from other lenders, because they've sent out those types of valuers and they've gone out and said there's no owner occupied demand, it's an unusual layout, it's an unusual structure, because it's a 5-bed flat that's got 5 ensuite bathrooms and 1 communal room, which is the kitchen. So we need to send out a commercial valuer where they'll go out and we'll get a valuation first time opposed to zero value, and we'll get a higher value as well versus what you might have got had they given it a value in the first place.
Well, let's just end on this. I'm going to ask each of you just for one sentence in response to this, and that is buy-to-let and property investment on red and amber, or green?
I'd say it's green. As long as you do your maths right, you talk to your broker, you get your plan down, and you make sure you know what you're doing and you stick to it, there's no reason why you should be in the amber or the red.
I echo that completely. It's doing your homework and making sure you've got as much research done as possible. But yeah, green completely.
Yeah, I echo and agree with the others on that. It's certainly a green. I would also say long term has always proven, 6% typical return, regardless of when you enter the market. Long term, it has always paid off.
And last but not least, Victoria.
I totally agree. I think it's definitely green. And as the others have said, it's about strategy. So use your broker, use your accountant together, come up with a strategy. What do you want to do? And as Austyn said, as long as you stick to the plan, 100% green.
Thank you all so much for being part of this today. I just want to say that it's thanks to professionals like yourselves who contribute to our Lenders Roundtable that landlords are able to perhaps see that the lights are on green and keep moving forward with their businesses. We will reconvene on another Lenders Roundtable very soon, but for now it's goodbye from all of us.